Well, hello, folks out there in YouTube land. Got a big show lined up for you, and let's get right on into it. All right, let's pull up the screen. Oh, yes, Palantir. And this stock has about driven me crazy. It won't leave me alone. But first, let's get into what's going on with the economy today and the markets and all that. And of course, we had another huge inflation surge. We know it's showing 7.5%. I still don't think that's what it really is. I think it's in the double digits, just based on if you go to the grocery store, buy gas, rent a car, try to rent an apartment, buy a house, anything, it's way more than 7.5. But anyway, that's way higher than people are used to, and it's definitely weighing on the market. And it's probably going to be here a while because you've got payroll inflation, but then you've also got energy inflation, and you've got shipping inflation, and it's all over. It's everything. So it's really a problem. But we do have a positive thing going on right now, and that's this little sucker right here. This Rona keeps dropping, and as you can see, it's run way up. Now it's run way down, and it's really it's a falling knife, which is good. You know, normally we don't like a falling knife so much, but in this case, we do. Because this has been an absolute nightmare to try to run a business and deal with this. It's been almost impossible at times. And with this coming down, it looks like we're going to maybe start getting back to some kind of a normal life for everybody involved. And that's going to be great for really the market, the economy, stocks. It's going to be a positive all the way around. Now, some of the reasons that this stock has really been bugging me and why I'm so interested in it is, you know, there's some simple basic stuff. Like right here, when you go to their balance sheet, they've got a fantastic balance sheet, over $2 billion in cash. So that's awesome. And you go all the way down here to debt, and you see there's no debt. I cannot begin to tell you how nice that is to see on a balance sheet if you're looking to invest in a stock. To see that, because first of all, you have no cash issues. You don't have any concern about debt. I mean, it really takes the pressure off the company. There's no concern about bankruptcy or any, they don't have to raise money if they don't want to. That's pretty much what it boils down to. Now, when you go down to their profit and loss, we do have an issue. And while their growth is great and their profit margin is awesome, they're at about 78% profit margin. That's one of the main reasons I'm so interested in this company, because it's software as a service. When you look down through here, you see they're losing money, loss from operations, which is a problem, even though the company's growing like crazy. But the one positive in this is that it's a problem that's easily solved if they choose to. And this is the big issue that makes me think this company could be really fantastic one day, is that stock-based compensation is the reason they're losing money. If you look at the 9 months in 2021 and realize that they're growing like crazy, they're growing at about a 30% clip. Without that stock-based compensation, they're a profitable company. They're already cash flow positive. And being cash flow positive is great for a company. It's fantastic. It means there's no pressure on it financially. They're adding money to the balance sheet. It's not pulling back. So all that's great. The issue, though, is this stock-based compensation dilutes the company, number one, and it hurts the bottom line, which hurts the share price, because not everybody's going to go into this and look deeply and say, oh, well, this is a non-cash item. They're really not losing this much money. It just, technically they are, but they're not cash flow. Their bank account looks great, and it's going to continue to look great. But when a company's not making money right now, and it doesn't have earnings, and it doesn't have a good PE ratio or even a PE ratio to speak of, that is a problem. And if you'll notice what's happened to all the high growth stocks, especially the ones that don't have earnings, it's been kind of like this. Okay, yeah, pretty much the guitar is a lot of the stocks out there that have been high growth, Palantir being one of them. Palantir's been hammered, and it's a company that could really be huge one day. It's hard to ignore that possibility. And when you look at this stock, really, it's dropped so much. I mean, it's dropped all the way from a high of, good grief, it was all the way up to almost 40 bucks. And now it dropped all the way down to 12. Actually, at one point it got down almost just a little below 12. But anyway, I bought at 12.10 and I bought at 12.50. And now I'm looking to add some more to it. It's at 13.50 right now. Anything that starts with a 12, I'm interested in buying. And again, this is very much a long-term buy for me. This is not a short-term play. I'm not going to swing trade this, I do not believe. I may change my mind on that and do both, but I'm definitely going to hold long-term because this stock has about driven me crazy. It's just, there's something about it. The idea of information and data mining and how important that is. You know, I've looked into this company as far as the things they do, and there's so much that they can offer a company that it's unbelievable. A municipality, a country, a government, the list goes on, and they're pretty far ahead of the competition if there is any right now. And it's not an issue of throwing money at it. My understanding is it has to do with time. And Palantir's, you know, a few years ahead of pretty much anybody that wants to compete with them. So when you think about the fact that any company with any size at all could use Palantir services, man, and that profit margin of almost 80%, darn, you know, it's really hard for me to turn my head away from this. And like I said, I missed it when it ran up. It came out, and I was busy on other stocks, and I missed it. It ran up, and I didn't chase it because I'm not going to chase any stocks right now. I'm not going to do that, and I haven't for months because this has been too creepy a market. It's really been difficult. But when it dropped down to 12 bucks, I was like, okay, this is getting ridiculous. This company's got too much in its future that could make it into a huge company. And I don't mean right now it's what, 20, let's see what the market cap is on this. Let's see, it's like 27 billion, I believe. Yeah, market cap down here, 27 billion. I mean, this is this is a company that could be 50, 100 billion. It could be way more than that. Now, that doesn't mean it's going to. And remember, you know, you're talking about a speculative stock that does not have earnings. It's not making a profit. And there's danger, especially right now in this market. But
danger, Will Robinson. Danger. No, Will Robinson. Danger.
But this pulled back so much that I think it's been de-risked. This stock is a lot like this for me.
My precious.
That's right. It could be my precious. I don't know. It's definitely got my attention. All right, folks, and that's Palantir today. And I didn't go as in-depth as I have the first couple of videos I did on it. If you want to see that, I've got a couple others I've done and gone into a little bit more on it. This is a stock I'm really keeping my eye on, and I'm continuing to add. And like I said, every time it pulls down, I'm probably going to just continue to add. And over time, I'll dollar cost average into this thing and get a nice position. And, you know, I'm diversified, so I'm going to be careful with it. But this is one that could end up being a significant holding for me. And if you like this content, be sure to hit that like button. That lets me know to continue to cover Palantir. And if you haven't subscribed, hit that subscribe button. I'd appreciate it. And I hope you did like the content. And we'll see you next time on Mr. Frugal Investor.